Just record this. Okay, so good evening, guys, and we're talking about order block, right? Understanding order blocks. What is an order block? An order block is the last bullish or bearish candle before a strong impulsive move or a break of structure (POS). It marks the zone where institutions place large orders, often leads to significant market shift. Think of it as the smart money entry zone where price may return for mitigation. Whenever we talk about mitigation, mitigation means when price comes to, close up a gap or seal a deal, right? So that's what we mean by mitigation. Types of order block. We have the bullish order block, the last bearish candle before a strong bullish move. It acts as what supports and a buy zone. While the bearish order block, this is the last candle before a strong bearish move, acts as resistance and a sell zone. Only valid after a break of structure or a change of character. So these two other blocks, yeah, they're only valid after a break of structure or what? A change of character. Now, number three, valid versus non-valid order blocks. A valid order block must what? Number one, cause a break of structure or clear shift. Understand? That's a clear change of character, a clear shift in structure. Cause a break of structure, which is a continuous pattern, or a clear shift in structure. That is a clear change, reversal in structure. Number two, break a key structure or sweep liquidity, right? A valid order block must break a key structure or what? Sweep liquidity. Be unmitigated, that means price hasn't returned to that particular order block yet. That is a valid order block. Align with what higher time frame bias for what stronger setup. So you want to see order block in line with the higher time frame bias, which means if the higher time frame is telling you to buy and the lower time frame are showing other blocks in which you can get in a good entry, you want to get into that setup to buy too. You don't want to sell, you don't want to see what a sell order block on a higher time frame and be buying a lower time frame with other block in that same zone. It doesn't work, right? You have to roll with the tide. So number four, we have higher institution. How institutions what use order blocks. Institutions can't place massive orders at once. They tend to manipulate price back to the that's the OB, order block zone towards to number one, few remaining orders, two, mitigate drawdowns, and three, once filled, price what respects the order block and continues in the original direction. So institutions, how they use it is just that because they can't place their orders at once. If they have $1 billion worth of orders, they can't place it at once. They tend to break it down. It could be in hundreds of millions. So when they break it in those phases, then they're now like, they cause an inefficient market, luring speculators and other traders to get into the marketplace, you know, and they manipulate the price to an back to that what order block zone to fill up the remaining orders and mitigate drawdowns. They put in a whole lot of liquidity to draw people to trade that with them. With that, they have enough volume, and once they have enough volume, they buy back that order. So everything is just like uh bread and beans gets it all intertwined. So number five, how to trade the order block. You want to identify the order block on a higher time frame like the H1, the H4, and the daily. You want to wait for liquidity sweep into that OB zone, right? On the lower time frame like the 15 minutes, look for change of character or break of structures. You also want to confirm entry with fair value gap, RSI divergence, which is optional. Prefer the London/New York section, for that liquidity sweep. Then your entry should be what? Your SL just outside the order block, target previous structure or liquidity. The tips: do not trade every order block. Wait for confirmation. Strong order block often what includes liquidity sweep, break of structure, fair value gap. Study field order block, they offer better lesson than wins. right? Order block in premium slash discount zone have higher probability setup. You know, this order block in premium zones and what discount zones, which is something we've done, they always give you higher probability of that trade going your way. That's what we call an A plus setup, or one of the criteria for an A plus setup. So we have our assignment here, which we're going to revisit. Something I want us to watch: practice spotting valid order blocks, pick a trending pair on the H1 time frame, identify a clear break of structure, find the last candle before the move market as an OB drop the um, M15 or drop to M15 or what M5. Uh, ask yourself, the price return to the order block. Was there a change of character or confirmation? Would you have taken the trades? Then what? Screenshot your setup and explain your thought process to me. So now let's get down to this number, which is what you guys, I know you guys are much more after. This guy, valid order block, but invalid order block. A valid order block must what? Cause a break of structure, right? So in this scenario, we're going to use an uptrending market. What did I just do? We're going to use an uptrending market. All right, this scenario, we're going to use an uptrend. Let's put this like this. All right. So in an uptrend, we already understand what market now. We know the market is what creating higher highs and what higher lows, right?
Sir, we
Now,
are not seeing the screen you are trying to display. You're only seeing the one of EUR USD. Is that the one you're displaying?
A what?
EUR USD.
Euro. Are you serious?
Yes, that's what we have been seeing since. Euro USD.
Are you guys didn't say anything? I thought I was sharing the screen already. My God. Can you imagine? So are you guys seeing the screen, the actual screen now where the lecture notes is?
Yes, yes.
You guys should have said something earlier. I thought we were seeing the screen. Wow, so sorry. So sorry, so sorry. This is the note. I was reading the notes to you guys. I didn't know. I apologize. So let's just continue from there. So based on this, that's number 3, right? Valid versus invalid order blocks. One of what the market must what first cause a break of structure or a clear shift, break a key structure or sweep liquidity beyond mitigated price has to return. So if it's in an uptrend, we understand that the market is currently what is trending upward, creating higher highs and higher lows. So we already understand that using our FIB to, let's use our FIB in this scenario. Using our FIB to, let's use the other FIB to, let me just start this stuff all over again. Let me do a beta one. It has too much. Let me just take. All right, so we're gonna have something like this. Uptrend. Like, all right, so this is an uptrend, right? Let me make this thick. You're gonna have something like this. Now, using our what FIB tool, premium discount, just plain, no, not this one. Not this one, not this one. Let's use premium discount. All right, good. So using our FIB tool, we already anticipate that this guy is already on an uptrend, right? You can't dispute this. You can't dispute this guy. You can't dispute this guy. And our market has created a higher high, right? So we know that market is supposed to do a pullback into a zone. But in this context, we're talking about order blocks. And it is what the definition tells us. The last what bearish candle before a strong bullish move, act as what support for a buy zone. Now, this is what the institutional push aggressively that broke structure here, also broke structure here. Now, this is the last bearish candle. This guy right here, this guy in what? Red. So I'm going to turn this guy to red. Have a little bit. This guy is the last what? Bearish candle before this what? Aggressive push to the upside. Look at it. So this last bearish candle, this is where this is the last candle for this aggressive push. And now you can see that this guy, as it is right now, it is lower than what this low, right? It has taken the liquidity around this area. It has what swept liquidity. This candle, this last candle has swept what liquidity. So let's call this liquidity L. So let's see if it's done something. So this is liquidity that it has taken. Now this is one of the criteria for a valid order block. You must see it sweep liquidity and break structure. Now this market has what? Broken structure, right? This is a break of structure, BOS. Also, this is also a break of structure here, right? Now another added confluence is that if it comes down to what a discount level. Now where's our discount level? We want to take this what from down to what up. Take it. That's from the swing point, the swing low to the swing high. This is our discount level. So we know that whenever markets come to anywhere here, it is likely what's going to what push back for a buy. Well, in this scenario, we have an institutional order block valid here, which means if this market comes down to this level, it will likely sink deep and come to this level where this order block is and what give us a good level to buy from, right? Because the market tells us that a valid order block was what sweep liquidity, the last candle before the aggressive push that breaks structure. This is the last candle in this sense. So this is the last candle. I'm just trying to use this illustration. And one of the best setup is when it's what's in a discount level. So we already understand this is in a discount level using our FIB. So let's write discount, right? We understand that this is in a discount level. So we're gonna have this guy right here. Let's have this guy right here. This is a discount level for price. And let's take this guy off, right? You already understand this is a discount level. Now let's take our order block. Let's mark our order block. The high and the low of that last candle is what you want to take. So most times we use your rectangle. You take it from the high to the low and what extends to the future. So you want to see something like this. A high, the low, extend to the future. So this becomes your order block, your order block. So you want to write OB. So whatever time frame it is, let's assume this is in a 1 hour time frame. You can put OB at what? H1. That's your 1 hour time frame. Let me just increase the writing for context. So this is our discount zone. We want to have this level telling us that what you are in discount. Understand? So okay. So this is what we have right now presently. Discounts. All right. So in this context, let's just put it red, green here too, because green means to buy. Now, what you're expecting is that the market to do a pullback, which is what a correctional move, a bearish movement, and fall into this level at some point in time. And once it falls into this level, it's going to do what? It's going to come into this level and push back upward, change the character and what push even higher. So this is what the market is going to do and what go higher to break even much more structures. So this is what it looks like. This is what another block looks like. So in this same uptrend, I'm going to create a series of candle, to illustrate this this stuff. So we have this guy, we have this guy, we have this guy. So this is the market. What market is selling at this point in time. So we want to clone this. All right. Need to also clone this. All right. So you want to also clone this. All right. So I'm going to clone this. All right. So you have seen the market is what's selling presently, right? And because this market is selling presently, what are you anticipating? right? So the market is selling aggressively. It's in a bearish movement, momentum. Now, this market at some point in time, yeah, comes up here. Remember, this is what a high. This is the highest point. This is a resistance level. This is a resistance level. Let's just put it plain like that. Now, the market at some point in time decides to what? Not be able to close, then it does something like this. Does something like this. An aggressive candle. Let me close lower. Right? Does something like this. And it does something like this. The bullish, healthy bullish candle that broke this high and stepped even higher. Understand? You can see the wick took out the liquidity here. Now we have another candle. Let me just clone this. All right, so we have another candle that came in and what's set printing even better structures to the upside. You guys will be the one to do the sell side of this thing. Understand? This is what I want you to see on your chart. Then we'll move into the actual chart to what talk more about this other block. So you want to see this one in this sense, in this place where candle what 1 and candle 3 do not touch. So I'm just gonna for structure's sake, I'm just gonna take this guy a little bit higher and make this one like this. Then we have another candle that comes in. Uh, and we have another body. And now break structure. Now we have what a clear break of structure, right? You can see how we're printing this guy. So we have something like this. And we have something like this. All right. All right. Showing that it has what indeed broken structure. So you can put this here and call this a break of what structure. That's broken that resistance level. And now it is now become a break of what structure. All right. Now, because of this, we now see that candle what 1 and candle 3 do not touch. Remember the criteria for an order block. Cause a break of structure or a clear shift, what break key structure or sweep liquidity, or be unmitigated, which means price has not returned, right? The last bearish candle before a strong bullish move acting as support for a buy zone. Now, where's the last bearish candle? And for another block, candle 1, I've taught this so many times, so I don't even know why I'm still saying this. Candle 1, which is this guy. This guy has to be blind. Candle 1, which is this guy, and candle 3. This is candle 2. This is candle 2, and this is candle 3. Candle 1 and candle 3 weak must not touch. So this is a high of candle what? 1. This is it. This is a high low of what? Candle 3. The 2 weak must not touch. If this guy comes here, if this comes here and crosses like this, or even touch on top of it, there's no other block here. It has been mitigated. But if it does not, if it's still up like this has become what? An unmitigated zone, which is called what? An imbalance, an inefficient area or a fair value gap. So you want to call this place your FVG. FVG. So there's a likely chance that this market, because of this structure that has been created, if you also look at it in another sense, you see what has been created. What kind of chart pattern is this or candlestick pattern is this? These 3 guys. What kind of candlestick pattern is this? A morning star, right? And it's a reversal candlestick pattern, right? A very strong one. If it's to look at a double candlestick, what kind of candlestick is this? An engulfing candle or what? A tweezer bottom. So you can see that the candlesticks formation, they still play a big role in this order block, right? So you need to understand your candlestick formation and also understand structure. So once you understand this and you see this fair value gap, this is what, and you see this liquidity sweep below, just down here, you see that this bullish wick is longer than this bearish wick, right? So it has swapped liquidity. So you want to call that level liquidity. So let me just reduce this to like 10. All right, so that's a liquidity sweep. So what you're anticipating is that the market will come back in future times down here, wards, tagging and push even higher. So you're going to be seeing something like this. Let's copy this guy. You're going to see something like this. See something like this. I'm just going to make this one even faster, so we don't run out of time. You know, let me see it like this at this level. Let me see it first become sluggish or fail to close above here. Let me see it first become sluggish. You don't want to see it go down aggressively. That's not a good sign. So you want to see this. You want to see this happen. Clone. Right. So you want to see this happen. The next one too. You want to see this happen. Alright, so you want to see this happen. All right, you want to see this happen. And tag you in. Or let's say it did not tag in at this level. Then this one tags in, right? You want to see this happen. So once you see this happen, tags you in, then you're going to see something else like this also, an aggressive candle. Because of that order has been filled, you see an aggressive candle, bullish candle that just like keeps pushing even higher, even more aggressive, you know. Likely something like this, you see something aggressive, and it's going to come out again, you're going to see something aggressive too. Clone like this, and they're going to see something like this. All right, following it, making structure even to the upside, even higher. All right, so this is what you're going to see. Now, in this sense, this one has broken another what? Structure, right? So you can see with this. That's just broken another structure. So this is how it looks like. Somebody's asking me a question. Yes, we have only 2 minutes. I'm going to try and send in another link so we can continue this class. So it's going to end in any few minutes, like in a few minutes now. So let me send in another link. Then we can follow up from there. I'm going to send this one might end anytime, so you guys don't panic. I'm just going to send in another link now. So we continue from there.